Hello everyone, welcome to the market outlook for the week. Gaurang Shah here from Geojit Financial Services. And after a very interesting week last week, interesting because it was a truncated week. We had virtually no trading for 2 days other than the Morat trading. And more than that, it was the FNO expiry week as well. But by the time we did do away with last week, the markets did close on the positive side on Friday. And as we approach the new week this Monday morning, there has been a lot of green all around the screen. And we are virtually once again at those levels wherein last time we did see a little bit of profit booking. But it looks a little bit different now. If we are able to stay above the current levels, then there is possibility for us to march even further on the upside. But let us approach the current levels with a little bit of cautiousness and a little bit of uh, view of consolidation of profit booking, which is likely to come through at current levels. Just to familiarize you with the levels where the markets are right now, as I speak to you, Sensex is at about 60,675, up 715 points. Nifty is trading at 17,980, up 196 points. Nifty Bank 41,285, up 295 points. Rupee, dollar, and the crude oil basket. Rupee is gaining some strength against the dollar. 82.40 is the level as I speak to you. And Brent and NYMEX has seen a downward move. Brent is at $95.10 per barrel, and NYMEX is at about $87.40 per barrel. Now, just reflecting upon the markets at current levels in the past, I think it was about one or two instances in the last time when we were close to these levels once again, wherein we did see a little bit of profit booking. And there is a little bit of noise on the street as well, that there is be a lot of high activity in the put call segment side as far as the current levels are concerned. So if we are able to digest that kind of volatility and stay afloat the levels where we are right now, then possibility of more upside. But a word of cautious for all those short to medium term investors or traders who have possibly taken some position. It is only prudent to keep your profitable stop losses on the higher side, or if you are with a low risk appetite, then you can consider some amount of part booking, profit booking, that is, purely because of the past instances wherein we were unable to hold out to the levels where we are right now. On the earnings front, whatever we have seen up till now, and this week it is going to be very, very interesting. A lot of large cap names will come out with their numbers. So whatever earnings we have seen on the second quarter this financial year has been up to the mark or in line with expectation, with little bit of disappointment, if you will. And my sense is that if the second quarter earning is going to continue the way it has been for this second quarter this financial year, then we can take a lot of positivities out of this second quarter earnings and approach the third and the fourth quarter, which is the remainder of this financial year, with a little bit of optimism. And just in case if there is no huge negativity from the global arena, then I think we can possibly see a lot of elevated levels going forward from here on. But given the past instance, I think it is prudent on our side to advise short to medium term traders to consider booking some part profits, or at least bring their stop losses to an elevated level as and when their investments or trading positions go high. That's the best way to possibly trail your short to medium term positions. Coming month, that is from tomorrow, November 3rd, there is going to be an off schedule or unscheduled RBI meet with the Monetary Policy Committee. And the word that is there on the street, that this is primarily because to understand where the inflation lies and whether something needs to be done as far as the inflation number or the levels are concerned. So that's one particular event which the markets will be looking forward to. But the street noise is that it is more to do with inflation rather than moving anywhere on the interest rate front. One just remains to be seen on 3rd of November as we know the outcome. Investors should possibly, and we have been in our earlier conversations, lower levels were 17,000, 17,300 on the Nifty spot. On the higher side, 17,800 and 18,000. These were the levels spoken not once but couple of times when we interacted with all of you all. And since we are at current levels, I think a word of caution is definitely needed for any short to medium term positions. But investors, I think, on fallback of earnings, try to look at all those companies which have delivered better than expected numbers, or where the commentary for the business outlooks for the future is coming out to be very, very strong. Flowing in line with what we do every time, to recommend 2 investment ideas. And as I can again recollect our earlier conversation before the first quarter or the second quarter earnings, we had mentioned that banking and finance should do well, and they have done well. And there are some interesting numbers that are likely to be rolled out by this weekend. The State Bank of India, which is the largest public sector bank, comes out with this number on the weekend, if I'm not mistaken. So we have 2 investment ideas from the public sector bank universe. First one is, of course, State Bank of India, and the second one is Canara Bank. Our sense is that all the merger, amalgamation, consolidation which took place some time back is now reflecting upon the balance sheet strength. And as we go forward, this strength is going to get even stronger on the balance sheet. So, and of course, not to forget, because of credit demand, net interest income and margins look good. Net NPAs and gross NPAs are coming down, and this brings down the provisioning levels as well. And of course, the strong balance sheet speaks for itself. And like I mention every time, friends, if India has to grow to 4 trillion or 6 trillion going forward from here on in terms of economy, then all will definitely depend upon banking and finance, because liquidity is something that is definitely required if you want to take your economy to the next level. So keeping in mind the growth potential, I think not only for this financial year but for the coming couple of financial years, banking and finance is likely to do well, and hence we would recommend investing into State Bank of India and Canara Bank from a long-term point of view. Only word of cautious, don't put all your money at one time. Start investing in parts, and as and when you get dips, you can go on accumulating these 2 stocks. Thank you very much for your patience hearing, and I'll see you again next week. Till then, take care. Bye-bye.